everybody. Welcome to the Trading Market Technicals morning call video for Monday, January 14th. Hope everybody enjoyed their weekend with family and friends. Back to work. It's Monday. And last week we had some marginal gains. Quick little recap. You can see on the board here. 0.4% for the Dow, S&P, NASDAQ, very, very similar, 0.77, 0.87. Marginal gains. We did break out of that range, which I'll show you in a moment. But it looks like the markets are extremely tight. Doesn't mean it cannot go higher. We need price to prove to us that we are going higher, although our indicators, which are secondary to price, are telling us that momentum is kind of waning. We're going to get into that in a minute, but just take a quick look at the board here on the sectors. Nice gains in the semi. Banks had a little bit of a lift as well. Home bill is up 2%. So everything seems to be chugging along as planned. And I keep mentioning, use a lot of caution out there. We have extreme complacency, which is a contrarian sell signal. I seem to think that way. So I'm reducing my risk out there, wanting to see what's going to happen. Big key event is going to be Ben Bernanke attending the University of Michigan next week for a big discussion on Fed policy. Everybody's going to be listening to that. And that's going to put the currencies back in track again, equity markets and commodities, whatever way he's speaking and whatever the market participants are going to decide. Are we moving higher or are we moving lower? And we have been literally in a dull range since this new year has started. And quite frankly, I'm the type of person a trader step back, keep an eye on a few things that I like, and if nothing comes my way, so be it, and let's get ready for the next day. In the meantime, a lot of research has to go into what happens, because whenever this move takes place, or if the market starts to pick up steam, you want to be ready, and that's really the key event here. And that's why we do these videos every morning, to get the trader, the investor, ready for their next move. And as you can see here, we'll go back to the board on marginal gains. So I want to look at our indicators first, and again, it's secondary to price, but I just want to, and sometimes it could be monotonous every day, but it's important to see where we are and where we stand. And then we'll get into the charts, and I have an overlay of some of the world sectors to show you where we are with that. It's also very good to see, hey, is the world economy following us as well? That's also a plus to the bulls for maybe a possible additional upside. Here's the bullish percent index, and I've been showing this to you for a while. We're at 77% at the highs here, and look at our S&P down here. You could see once we reach these areas, market started to roll back again. So again, it still has to prove to us by crossing over that 8-day moving average, but however, right now still on a buy signal. Look at the RSI, extremely overbought. So these are just a word of caution, a red flag. Look, let me tighten my stops if I'm swing trading. Again, if you're day trading, nothing really to worry about except looking for a trigger for a reversal move on the downside. Okay, let's take a look at our NASI weekly. We literally almost got a sell signal last week. We are still on a buy signal, as you can see here, looking to curl down. This week will be interesting to see if do we just push up again or we start to roll back over again. And this as well would entail give us a sell signal. Very good indicator, as you can see here. Several weeks back, it gave us a buy signal in the market, and we had one down week out of 7. 1, 2, 3, 4, 5, 6, 7, 8. Excuse me. So this is a very large move for something that hasn't really paused. Didn't really give us not even a 1%, 1.5% pullback in the market. That's why I'm a little more skeptical with the high complacency readings to say, let me get in and let me start buying the market up here. That's something that I do not do. Quickly, we'll go into our NYMO, and as you can see here, we hit overbought, and then right into this area. We like to see really an overbought reading up in the 80s and 90s. We have not gotten above this area here, above 60, but that does not mean that we can't roll over and or move higher. So it's telling us here there's plenty of room to move higher to the upside, try to test those highs, and then fail, or reverse course, plenty of room to the downside. So the McClellan oscillator also telling us that we do have additional movement to the upside. And this is a very reliable indicator. Okay, and I've been showing this to you again. NASDAQ record high, well elevated above these areas, and we still haven't had this dip lower. So again, we're just going to have to wait and see. I'd love to see this market fill the gap, or at least a little bit of the gap here, before moving to those highs. Because once you get those highs and you get a near-term negative catalyst, this market could really take a turn for the worse, and it tumble really hard. So that's something that I'm just going to keep an eye on. Again, trade according to your risk sentiment, what you feel comfortable risking on a regular basis, and of course your account size. Very, very important. Position sizing to what you want to lose, and that, I can't stress that enough. Okay, let's take a look at copper daily, and as you can see here, we're in a symmetrical triangle and bull flag into these moving averages here. Nice little area of support. Copper looking pretty good here. Nice big bounce up, and again, a break above this area, it's going to really send this market flying higher. Take a look at the weekly chart, and I've posted some weekly and monthly charts here since it is Monday. Still in the symmetrical triangle, looking to break out here. So I'd be watching what copper does on a consistent basis here. Let's take a look at the SPX ATR. Back in here into the support area, and as you can see, every time we get into this little area of support, right up in here, markets have taken a little bit of a tumble. We're not there yet. Again, more room to run, and I think this S&P could move a little bit higher. But without additional positive catalyst, the market just can't just continue to drift higher and higher and higher. And can it? Yes, excuse me, it can. However, there's just a little bit more risk that entails every time this market just runs higher on nothing. So earnings season is upon us. We're going to get a ton of earnings this week, and I think that's going to be the likely driver, aside from Ben Bernanke speaking this week. Earnings is really going to be a tell sign to see, okay, are we really, is this the reason why we are up at these levels? Market's doing really good now, chugging along. So that's something that I'm going to be watching on a consistent basis, especially after hours. So I would do the same if I were you. Okay, VIX. Let's talk about the complacency of the markets here. Extreme lows at these lows, 1350. It's unheard of. So we have extreme complacency here. No fear at all. Use caution. That's my thing. When I look at that, I use caution. So that's something that that I'm going to do, and you're going to hear me say this for quite some time. Bullish CPOE options put call ratio down to 72. Again, bullish, but contrarian to me. I'd be looking out for some sort of a rollover again. Again, this could drop down way low, and as you can see here, markets continue to just chug along here. Oversold in the indicator as well. And I just want to show you the SSEC, which is the Shanghai. We had a miserable sell-off here early November, and I said, watch guys, let's take a look and see if this market can follow suit, and sure enough, it exploded to the upside. Very positive. That's exactly what you want to see if you're trading commodity, industrial metal stocks, ETFs, and or the market itself, because Shanghai usually leads. This time it didn't, and I'm going to show you this from here. And what this is here is a performance chart of the world markets. And here we have the German DAX. Okay, if you look at the top, you'll see the S&P in red. This is the S&P. And you can see how a lot of these European indices, right? The German DAX, you have the one in blue, you have the Frank Cock, and then you have the London FTSE. And then down here you have the Toronto Exchange. And then, of course, we have our Shanghai. And as you can see here, usually this would bottom first, which did not. All of our world indices bottomed, and then our Shanghai bottomed, and then rallied, and just really gave a lift of support to the rest of the world markets here. But if you could see clearly, it looks like these markets are all starting to top here. Okay, and again, a word of caution, red flag. Not to say you can't go out and buy anything. Absolutely not. Not to go out and sell your portfolio. Absolutely not. I'm a big believer in buying protection, buying some puts against it. Some people don't like to do that. Just if that's the case, tighten up the stops for the longer term investor. For the day trader, obviously, really no effect. Just looking for some positive trades here, and good setups. But you want to know what the overall market's doing, even if you're day trading. Very, very important, because once you get the sentiment on your side and the trend, that's 50% of the battle, and then the rest is just managing the trade. Okay, but this is really interesting to see, and I like looking at this usually once or twice a month, and you can see how we're all topping up here. Okay, and the DAX especially. I mean, this thing really just took off. But having a German DAX at these levels and rallying really hard is also a very, very positive sign here. All right, guys, let's go into the charts. As you can see, and I see a lot of traders. They email, oh, it's so dead. I'm not doing anything. You know, looking for different stocks is a whole other ball game, and learning how to find them, and also willing to take that chance to say, all right, you know what, market seems a bit lofty here. I'm going to look to short or whatever. But intraday, if you're day trading, you got to follow what the trend is. The trend is up. You're looking to buy pullbacks. If we're rolling over and we're breaking support and we're down below the daily pivot below that, you're going to look to sell rallies. And really, that's the best way to keep you out of trouble. But look at here what happened. We broke up. We sold back off, and we closed higher. We pushed higher at the end of the day. And then on Friday, of course, we sold off the first half hour, 40 minutes, held the upper end of this range that we've been in since the beginning of the year, and we just kind of grinded higher, very, very slow, and then pushed higher into the close for some more short covering. And that's really what's just killing this volatility. Okay, let's take a look at the Spider monthly chart, and I like to show this on a Monday, just to show you where we are. Big, big, big double top here, running in. Do we have room? Absolutely. And we're up in this upper channel here, and we have plenty of room to run. So again, guys, if you don't think this market can move higher, I would be very, very cautious about that. It can move higher and can grind higher on no volume. When in doubt, when there's no volume, market does grind higher. So let's just keep perspective here. Remember, price is what pays us. Our indicators are secondary. Remember that. Okay, take a look at our weekly chart of the spiders. Looks like some sort of a big, larger bearish rising wedge coming into resistance now. And the spiders, here's the weekly chart. Again, drop off in volume. That's something that I really do not like to see. But then again, if the volume is lighter but market wants to trend higher, you can't fight the trend. Here we go again with our spiders. And I'd like to just show you what the volume is here. But nonetheless, we broke out of this little range here, 2 days. So giving us some bullish price action here. 151 in that inverted head and shoulders in the spiders, and we're at 147, so we got a few dollars more for a move higher. Another big catalyst can push us up there in a matter of days. Don't be surprised. S&P cash weekly, take a look at this, back up in these lofty levels again. Volume zones, as you can see here, are starting to go lighter, so a big push out of this range could easily get us to that 1555 area. And that's the weekly chart of the cash. Again, inverted head and shoulders, and as you can see here, here's what really concerns me. But again, if the market keeps chugging away, really not. I like to see they really get aggressive. Everything moving in sync with each other, really giving a true strong bullish signal, and the longer term perspective, like I did last week, really is in check. I just like to see some sort of a pullback. Market just cannot continue to move higher and higher and higher with no pullbacks or some sort of a rest. Yes, we did get a little bit of a consolidation here, but to me, I like to see a little bit more of a pullback, a little bit of fear step in. When you have people buying up at these levels and these new longs, that just creates more havoc when the market does pull in, because people start running for the exits, and you're going to have a lot of long players still stuck up in this area thinking that we are breaking out. Not that we're not. Just again, I got to use a little bit of word of caution to build any new long positions. If you're long, no question about it, hold on to it and let it ride up to where we get your sell signal here, and just tighten up your stops. But CCI, if you take a look, as the markets run higher, we start to roll back below that 100 area, and we don't stay there too long. So just something, another thing to point out. Our 60-minute S&P, as you can see here, inverted head and shoulders, looking for a 1513 move. Really not that far away, guys. 1471, we're getting real close here. 30-minute S&P with a Bollinger Bands, getting tight again. Look, as you can see here, we did break out, and then we rallied. Now look at this. Breaking out again up at this upper end of the range for the last 10 days that we've been in, and now we're above it, bullish, and now the Bollinger Bands are tightening, telling us another big move is coming. And again, doesn't tell us which direction, but if I was looking to guess, obviously it would be higher, since the market is trending higher. Okay, XLF weekly, that's the banks doing fantastic. Had a big pause from Thursday, another big break out of here, a couple of days closing above it, bullish. That's going to help the equity markets as well. So again, on the long side, big bullish case We're just a little bit extended here. Take a look at a daily chart of the transportation. One of our leaders, again, moving higher. Bullish configuration on the moving averages here. Nothing wrong to say about it other than I'd love to see this thing come back and pause and some sort of a retest of this upper resistance, which is now support. Okay, IWMs back up in here. Beautiful, beautiful all-time breakout. All-time highs, 89.50 on the inverted head and shoulders. We're almost there as we speak. And again, we're just trying to moving along, chugging along here, going sideways to slightly higher. Bullish, but we're a little bit extended, and our volume has dropped dramatically. So, again, a word of caution, but I like this is what you want to see. Another leader of the indices that we follow. I want to see this. This is exactly what I'm looking for. I'd love to see some sort of a pullback so that we can really get aggressively to the long side. Just a little nervous of looking to start building some long positions up in this area. Day trading obviously is a little different. Take a look at our weekly chart of Apple. I think Apple's a little, again, still in trouble here. Just holding this area at 506. Apple reports earnings this month. Very, very interesting to see what happens. Does it break down? And if it does break down, you're probably going to look at that secondary area of that 467, 469, 470 area. And if that holds, then you're basically looking at the 200-day moving average. And until Apple starts to make higher highs and higher lows and can get above some of these moving averages, I would stay away from Apple. That's just me personally. Daily chart, you can see a nice descending triangle. Here's your support again. And our volume profiles, anything below this is basically a free fall to the 470. So again, just to use a word of caution here. And our weekly chart of Qs. Now, aside from Apple, which is really Qs, heavily weighted in the Qs, tech has been doing very well. The semi's been doing very, very well, as you can see on the performance board in the beginning of this video. So doing really quite well here, holding in nicely despite of Apple. And here's a daily chart, really looking to break out. And Apple, I think, is holding his sector down. And it's going to be interesting to see what happens with Apple. Could that be a change of sentiment? Could earnings be a change of sentiment here? And we get some sort of reversal, or at least some sort of a pullback? It's yet to be seen. I will keep you posted on the Bernanke University of Michigan discussion next week, this week, as far as him discussing on Fed policy. I'll get you a link to that as well, and also a Twitter link as well. Have a great day today, guys. Be safe out there, and I'll talk to you tomorrow. Take care.